Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate market report for November 2022. And I'll be right back with the report. Okay, we're back, and it's a great day here. They're laughing at me here at the office because I'm being more talkative than usual, and that's a good thing. And today we're going to bring you a fantastic report about real estate. We're going to start off with our resale homes, and here's what's going on with the resale homes. Now you can see this widening gap between the red line and the green line, and what that's the indication of is that sales are starting to drop off as I'm going to say continue to normalize here in quarter 4 of 2022. And our inventory is starting to creep up just a little bit, albeit not much, but it is creeping up just a little bit. Specifically, here's what's going on. Pending contracts are down year over year. They're 33.1% year over year from 444 contracts last year to 297 during the month of October 2022. Sales themselves are down 30% year over year from 673 down to 469. Remember, this is resale homes only. It doesn't include any of our new homes. We'll get to that in just a couple of minutes. Months of inventory is up. Now, this seems like it's a huge number, 16.1%, but the truth is it's not that much of a difference when you look at actual homes on the market. It's a 16.1% change year over year, 124 to 144, not a huge difference. It is still a seller's market in most price ranges here in El Paso. The average price continues to rise. We're at 9.8% increase year over year. We were at 225,463 last year, and we're at 247,569 this year. That's due to the fact that we still have that low inventory number. Yes, interest rates are still high. We'll get to that in a couple of minutes. But because interest rates are still high, we just have fewer buyers, but we still don't have that many homes out there on the market. Average size of the home is down just slightly, excuse me, at 1,835 square feet. That's going to get you 3 bedrooms, maybe 4, plus a den, maybe 2 living areas, and a couple of bathrooms and a half. Price per square foot is up at 12.1%, and that's at $134.47 year over year. Well, not year over year. $134.47 is what the price per square foot average was during the month of October, and our days on market is down, slightly up, 49 days on market compared to 46 that we had on the market last year. Overall, it's still a good market here in El Paso. Yes, the sales are declining, but remember, we just came out of the best year we ever had, and because of that, even though these numbers are a decrease at 30% down on sales, it's still a very good time. And when we look at the end of the year numbers, I think you're going to be impressed with what we have. Now, onto the new homes market, you see we also have that widening gap between the available inventory and the sales. Now, they had a downtick on sales this past 30 days during the month of October, but that inventory continues to rise. The builders are still, last month we reported that many of the builders are increasing the incentives to the buyers. They're increasing incentives to the agents. They're trying to sell that existing inventory as we get back up, okay? What specifically? Well, pending contracts are down 35.6% year over year, October 22 versus October 21. Sales themselves are up 8.2% from 159 to 172. That seems odd when you think about the market going down. But what happened last year is that we were having problems with that supply chain, and we had problems with the appraisals, specifically the VA appraisals, and that's what makes the difference this year. The builders are able to finish the homes, and the VA appraisers are not as busy as they were last year, so they're able to deliver the appraisals faster than they were last year, so they can get these contracts closed. Months of inventory. This is your big number right here. 86% increase in months of inventory, where last year we had 3.46 and now we're at 6.44. We're to the point where we can say on that 6.44 months of inventory, if you look at what's really available today, I say just cut that number in half. It tells you that we got about 3.5 months of inventory that somebody can move into in the next 30 days. That's just because we know that some of the homes are completely finished. Some of them got listed today and it's just an empty lot. So somewhere in the middle is where the real number is. And it's just very, very challenging to come up with that number. So that's why I say we've got about a 3-month real supply of inventory, not that true 6.44% from a numerical standpoint. Average price continues to go up 13.9% year over year. Yes, building materials are continuing to rise. Demand is still there, but as we see this increase in price, what we're also seeing is a decrease in purchasing power, and we'll get to that in a couple of minutes, but we're seeing the market shift overall, and the builders are going to be starting to feel that a whole lot. Average size of the homes up just slightly, 0.26% to 1,925 square feet, and the price per square foot correlates with that average price, 13.6%. They're at 152.24. Days on market, 129 this year compared to 178 last year. Now, this again is our appreciation rate, same one we've had for the past couple of months. This showed that we had about a 9% increase in appreciation through the end of June 2022. We should have the third quarter results probably in the first week of December. Hopefully we'll have that for next month's report. How about the stock market? What's going on? Well, stocks are coming back. In the past couple of weeks, we've seen an increase there. The S&P 500 is up almost 8% over the decrease, the annual decrease of 15.92%. The Dow Jones is up 13.95%, and the S&P is up 10 to 12%, depending on whether you're in the 400 mid cap or the 500 small, or excuse me, the 600 small cap. Interest rates, they're high. Okay, I mean, that's about all we could say about it. I'm going to put another video out next, and you're going to be able to see what happens as the interest rates rise. But today, they're sitting at about 6.637. So that's 6 3/8. That's a huge number compared to where we were a year ago, which was at about 3.5%. Okay, huge impact that it's had on the market, and it's really compressed our buyer pool down, and many of the buyers on the bottom end have just dropped out of the market altogether because they just can't buy in today's market. This is what it looks like on your trend graph going back to August, but we're at 6.75 according to this report that we got off of Zillow. 3 key takeaways for this month. Still a very good market. We've got demand out there. Yes, the interest rates are high, but the lenders are starting to talk about things like 2-to-1 buy downs or 5-year ARMs and things like that, to where you can buy that rate down. And if you know you're not going to be in the home very long, that might be a good way to save some money. You'll pay a little bit up front. Maybe you can get a seller to contribute. Maybe not, because the months of inventory is still low. Real estate appreciation is still giving a better return than the stock market when you look at the annual basis, because we're still at about 8%, and the annual basis for the stock market is about a -15, -16. In new homes, because of the fact that they've got a lot of inventory out there, this is where you're going to find the deal where you can go in. The builder will probably pay for your closing costs. They'll get you into a new product. Maybe you can negotiate more landscaping or something like that. So those are our 3 key takeaways for the month of October. And then we look at some of our charts that we got from my friend Dr. Fullerton over at UTEP. And some of these came from the Texas A&M Research Center. Some of them he put together himself. This shows our county unemployment rate. We want to look at the red line down here, which is less than 4.5%. That's huge historically speaking, because when I moved here in 2000, we were at about 11% unemployment. So this is really big when we got unemployment that low. We're pretty much at full employment in El Paso. That's a great thing, and rates are going up for workers. There's what it looks like, including that big spike that we had back in 2020, and that's from COVID, when we had all of that unemployment with people getting laid off. We went up to a 14% increase. El Paso median housing prices, you can see that it continues to rise. We're at about $245,000 for the median price here in 2022, where back in 2021 we were at about $215,000. So we've had a big increase over the last year. And then this is what it looks like on the chart going all the way back to 2006 on the left-hand side of your chart, where you can see that the price was probably about 107, 108 in 2006. And now we're at about 245. So that's a big increase in that 16-year period of time. Housing inventory continues to be low. So this tells us that we've got a 2-month. That includes the builder supply. It's not just the resale, it's overall inventory for the market. And then the months of inventory, this tells us that we're right at around 2% over here in 2022. And that's our overall market report for October sales 2022. We're recording this here in November. If you've got questions about how this information affects you in our local real estate market and how we can be of service to you, please give me a call. My cell number is 915-588-1850, and I'd be happy to answer any questions you or somebody on your behalf would have about our real estate market. Thanks for watching. God bless you, and make it a great day. Bye-bye.